You having trouble dollar cost averaging, or you keep hearing about DCA, dollar cost averaging, you have no idea what to do? Hold tight, lock in. I got you. It's your boy Wall Street. Let's go. Hey, you know who it is. It's your boy WallStShooter, and I'm checking in for the gang. Hey, man, I know you guys hear about DCA this, DCA that, and you probably like, man, spinning the block trying to figure out what the heck is DCA. Have no fear, beloved. I am here to help you guys out. DCA is dollar cost average. Shooter, what is DCA in the what is that in plain text? I got you. Easy the way to put it, dollar cost average is how you enter a play without spending your entire budget. So you're basically getting in a play at a certain percentage of gain or loss. Usually if you're dollar cost averaging in the play, you're doing it when the price action is pulling back of the cryptocurrency or stock. Now, dollar cost average can be used in anything with price action and volume. Crypto, stocks, forex, etc. Right? So you're basically setting, and my camera froze, I apologize for that. You're basically setting, let's switch to the chart. You're basically setting a parameter, right? And I'm gonna give you my parameter on how I do it in this video, but you're setting buy-in levels on where you would like to buy in at a certain percentage, and you're going to spend a certain percentage of that budget. Okay. Dollar cost averaging out of the play is how you take profits. It's reverse. So you're looking at your chart, getting an idea where you're going to take profits based on certain levels. It can either be demand zones, or supply zones, resistance zones, or layers of structure or confluence. I know this sounds maybe still foreign, but I'm gonna show you on this chart. So we're looking at trading view. I love to use trading view when I'm trading or looking at cryptocurrencies, price action and volume, etc. Before we jump into it real quick, if you never used trading view before, I'm gonna make another video on the nuances on how to use it. But for the sake of this video, I'm not going over it. Real quick, if you look up here, I have my time frames here: 2 minute, 5 minute, 1 hour, 4 hour day chart in the week. If you're not too sure with that, pretty much if I was to click the 1 week chart, I'm going to get 1 week worth of price action per candle. Each candle that you see here, let me zoom in a little bit, represents 1 week of price action. If I flip the daily, I'm going to get per day, right? Makes sense? Each candle is a day. 4 hour, each candle is 4 hour. Now, what are you seeing as I switch throughout these time frames is I'm getting more data, right? Obviously, if I'm going from 1 day candles to 4 day candles or 4 hour candles, I'm going to have more candles to analyze and go over with. The same goes for 1 hour. So these are all 1 hour. I'm still looking at year to date, and I can scroll all the way out and get the bigger picture, right? So when you're dollar cost averaging, I suggest either doing it on the weekly chart or the daily chart. For the sake of this video, and not getting into too much information, we're going to do this on the weekly chart. And I'll probably be toggling between weekly and daily, to be honest with you. But we're going to start with the weekly chart. I'm going to blow this up where it fits nicely, right? This is a week. Remember, what is that? Dinosaur. Oh, this is the very beginning. Oh, they just added that. That's pretty cool. Oh, this is my first time seeing that. Okay, cool. So this is when Ethereum actually became Ethereum back in 2015, August time frame, right? I know that's true because I bought Ethereum in 2016 or time frame. So I bought Ethereum roughly, it wasn't that low. I wish I would have got Ethereum around 50 cent a coin. That'd have been awesome. But I mostly bought Ethereum right around this area, about $14, $20 area, right? Pretty young in the game, really didn't know what I was doing. I knew it was one of the hottest ones because a friend told me and I bought some. I'm still holding Ethereum too. Don't try to figure out what my bag looked like. I'm sitting nice. That's all you need to know when it comes to Ethereum. Anyways, so dollar cost averaging, again, it's all about setting levels of buying opportunity. For me, what I like to do, I like to set levels based on supply and demand. What is supply and demand? Supply is where you have strong sell-off pressure from sellers taking profits, where the price action moves pretty harsh in a direction. So for this example, I'm going to actually switch to the daily because you can kind of see it a little bit better, right? So I'm on a daily right now. And now demand is where you have buyers who are buying and the price action increases at a drastic amount. So there's a lot of buying pressure, which I'm going to show you real quick. Let me just a few candlesticks here that you can see off the top of selling pressure, right? So right here, this is a prime area for a supply area, right? So you have this low volume or average volume, and then next thing you know, you have this quick buying pressure or selling pressure that erupts from this trading sideways or consolidation. Couldn't think of the word. Had this consolidation followed by a drastic sell-off, right? So this is a good supply zone. And how I will mark that, I would simply come over here to my rectangle, right? And I'll get the beginning of the move, or I'll get the entire move. And what I mean is that I'll pick up this confluence or structure area where the move actually started. So for this sake, I can grab it here, and I usually go wick to wick, and I'll swing it all over as far. I don't know. I don't really count how far to go. I just kind of just swing it out there. Now, this is previous information, so it looks a little clunky or whatever the case may be. Then for me, how I like to identify my supply areas, I change it to red, right? Because red lets me know it was a sell-off. So here, I know around this time of May of 2021, there was a massive sell-off. I have the volume here to prove it, right? There's a massive sell-off. People were taking profits, and we had this huge candle, these huge red candlesticks that pretty much sold off. So I know this is a supply zone. What is the significance of that? Now, knowing supply and demand, price action tends to come back and retest those zones. Now, it's very different when you're looking at, and it's the same and similar in a sense, but it's a little bit different because crypto is so volatile. So you can have a 40% sell-off, and it may take a while. Prime example, we have this massive sell-off here, and let's get the correct percentage. So I'll come over here to my price range. I'll grab the top of this candlestick, and I'll take it all the way down to the bottom. Now I can take it from this. This is the full move. So this was a 60% sell-off, right? So we had this 60% sell-off, right? From candlestick to candlestick. Let me move this out the way so you guys can see that. Actually, I'm gonna move it here because we had this sell-off here to here, which is 60% move. And then we had some consolidation, a decent amount of sell-off here, a retest of some EMAs, and then we've retested the supply zone. So I like to watch this in the sense that I know that price action will return and retest, and it will either retest and continue down, or it will reverse and continue to push up. In this case, it retested and had another significant, decent sell-off. It didn't break the zone and had a 30% sell-off. Now, after we had this initial set-off and it settled, we had a reversal that happened. And let's look at how much that was. Right? So we had 136% gain, right? And then we had a 33% sell-off. Now understand this, and this goes into dollar cost averaging because you have to understand the nuances behind it. If you have a 130% run up, right? A moonshot, you can expect as a trader or an investor, there's a difference. You can expect that price action is going to pull back and correct itself, especially when you have this massive run up. Now, what do we see here? Now, we already have a supply zone. We know the percentage of the sell off. Now, within this run up, we have created a demand zone, right? Supply came in, we sold off, corrected ourselves from this massive run up, corrected ourselves by 60%. We consolidated. Buyers and sellers were fighting amongst each other, trying to figure out what was if Ethereum at the time was overvalued or undervalued. And then we had a breakthrough where the buyers, usually institutional money, people with big dollars, right? Understand the roles that's going on here. If you don't know, you have institutional investors, And then you have retail investors. We are the retail investors, the people who make small splashes. Institutional, the Warren Buffetts, the Elon Musk, the big boys who got the big millions, a lot of millions, a lot of billions, hedge funders, banks, etc., who put big money into it. They're the ones that push the price action up. Okay. So we have this demand zone here that was created. Same theory as when I was looking at this supply zone. I'm looking at the start of the move. I have it. I go from wick to wick. And the difference is I'm going to change this to green. So I know when I first look at my chart without even looking at the price action or where it is, if I see this red box, I know that's a supply zone. And if I see this green box, I know that's a demand zone. So we had a demand, price action went crazy. Now, what do you see? It hasn't returned yet. This demand zone was from July 20th of 2021. So, and since then, we have not returned within what we're looking at right now. Now, let me zoom out and scooch over. And what I want to do, since this hasn't been tested, this demand zone is still valid. We have not had return sellers or buyers within this zone. So this zone is valid. Now, for this supply zone, right, if I stretch it, this supply zone is no longer valid. Why? Because we had a rip through, a retest. We got caught up here in resistance, and then we shot here. This is where the sellers won. They won off. The buyers are no longer there. Sellers took over. Imagine this as tug and war, right? When I finish the example, this all gonna make sense for dollar cost averaging. Trust me. So as you can see, have this large gap space here. I'm stretching this over, right? I'm gonna stretch it all the way over. Now, we finally, from July to first touch was in May of this year. Now, we already know the sentiment of the market has been selling off. We get into this demand zone, we lose it. We as in buyers, right? Remember, this is a fight between good versus evil, or buyers versus sellers, bears versus bulls. So it retouches, reclaims this retest from 2021. And here we are as bulls, we lost the battle, right? Lost the battle, sellers took it over. And what happened, right? We can cancel that out, or we can keep it just to keep it as a placeholder. But that particular demand zone has failed us. And what we did was create a supply zone within that demand zone. Harsh sell-off, right? We tried to hold this area. We traded sideways, and the bulls lost. So what we'll do, we can overlap this. We know that it didn't last. We come in here, we stretch this out. So now we have overlapping zones, right? And that's okay, That lets us know that it was intense battle between bulls and bears. In this case, the bears won. Now, as we get scooch over further into the chart to actual today's trading, we see that we have a heavy supply zone. We have harsh sell-off here, confluence. We have a demand zone, right? You see that, right? Have a big demand zone. Let's map that out. If I was to put this on a week, I'll actually be mapping out this whole area right here. But for the daily, we're gonna map out that, right? So I'd have this demand zone here between $900 ETH and a $1,000 ETH. So I know that. From there, we had a run up, a nice size run up too, right? If I top this off, 100% run off. So if you put $1,000 in, you made $1,000. Now we can expect what? A pullback. When you have a lot of buying pressure, we can expect that the price action would correct itself, which it did, right? So I'll remove that. We went back into this buy zone from previous, right? Now, this buy zone, I would get rid of it. Why? Because we lost it here. We retested and could not break through and lost it again. That's a lot of plays or a lot of bounces within that area. That zone is invalid, right? This particular sell-off zone or supply zone is still valid, right? Because we're still selling off. We have not broke it. We peaked it, but we came right back in, tried to break it again and lost it. All right. So the dollar cost averaging, as I look at this, and I want you to kind of, pause this video and kind of look at this chart and think, okay, we have our current supply zones, right? I can even say, I don't want to use this one, and I'll use this one particular to kind of keep everything in front of us. I'll stretch it out. I have this supply zone here, more current, right? And I know that eventually it will pull back. I'm looking at this chart and I see that we're trading sideways or consolidating, meaning trading in a channel. No movement to the upside or downside, right? It's a very risky time to be investing when it's trading sideways, right? Let me get rid of this so we don't. And let's mark this out, right? Let's put this on a horizontal array so we get some price action, right? So I got some supply. I got support and resistance, and I'm gonna make a video on support and resistance and how I plot that, right? So I know this is my trading area. This is my support and resistance for this current price action from September to current date. So dollar cost averaging. Now, what I'm looking for is a pivot high and a pivot low. Unfortunately, it's very hard to get that when it's trading in a consolidated channel such as, but we can still figure out buy-in and buy and profit taking. For this example, I'm expecting Ethereum to continue on the downside just based off of market sentiment. So I'm going to plot my dollar cost averaging zones or buy-in levels. And I'm also going to do my profit levels as well too, but I'm going to do the buy-in levels first. So first buy-in level, and I have an alert here set already, would be this 1191, right? So I'm going to get an alert on my phone and Discord to let them know once we clear this previous swing low is your previous low price action, right? From the lowest wick. So at this point, this was our low before we went high. If it don't make sense, let me zoom in and make that a little bit bigger. All right, so we came off a high, which was a previous high or a swing high, and we created this low before we start going high. Now I know it's not like super high or anything, but this was the last peak of low before we shot high. So this is my swing low. So anything below here or at this level of 188, I'm going to be looking to buy some Ethereum, right? It could be a whole ETH, it could be a portion of the ETH. That's a buy zone for me. That alarm that I set, that trigger, I'm going to probably buy some ETH. Now, what's another area that I'm looking to buy ETH? Now, I like to do the 20-20 rule. If I had $1,000 and I would like to use 20% of it each time I lose 20%. Now, is it always going to lose 20%? Absolutely not. You can change the parameters of how you do it. The key thing is that you're not throwing the whole $1,000 if it hits this 1188. Because if it hits this 1188 and continue to trade down, now you're done. You're not done, but you're losing money, right? So if I was to go from this, let's say ETH do hit 1188, right? And I put in 20% of $1,000, that's $200. My next buy-in, I'm gonna do another 20%. So I'm gonna take my price range and I'm gonna map out 20%. So my next 20% buy would be about 947. I feel comfortable if ETH reach anywhere in that 947 from 1188, it's roughly what, $241 difference. I'm cool with going ahead and putting in another 20% or maybe 30% just so I can have a little bit more than what I put in previously. Makes sense? So now I have 50% of my budget left, $500. So let's go from there. So let's say I want to be like, you know what? I don't think ETH is going to go further than this. Maybe I say, if anything, if it drops 15%, I'll do another buy-in, which is roughly around $800 ETH, right? And I'll put in, let's say 20% or 30%. If I put in 30%, that means I have 20% left. And let's say if ETH drops another, let's say 20%, and that puts it around 640, right? I'm gonna put in the last remaining of my initial budget. Now, obviously, if ETH continue to drop, you might want to say, I have another $1,000 to play with, and I want to continue to do that, right? Dollar cost average in, 20% rule, and I'll just do it like that. So that's how you dollar cost average. It takes a lot of patience. It takes a lot of closing your ears and blocking out the noise from social media, because you're going to see all the Ethereum to the moon or Bitcoin to the moon is going by parabolic. Better get in before it's too late. But if you come here and look at your chart, do some quick technical analysis, you can understand that, you know what, I got a game plan. I need to stick to it, right? There are times where we'll deviate from the game plan, but before we make any type of moves based off of a friend telling you or social media, we need to come back to our chart and see where the price action is. We need to look at the price volume. We need to look at our certain indicators, but we need to make sure we need to find our supply and demand zones and see if it's smart for us to continue to put money in or out. Now, that's dollar cost averaging in the play. Dollar cost averaging out of play, it's the same thing, but in reverse, right? So I'm looking at this previous high swing, right? This is our last high at 1387. So we're taking profits. Let's say we've been in the ETH, we got 10 ETH. Let's say we got $10,000 worth of ETH. We'll do the same thing. So if ETH was to run up from this point to about, let's say 20%, that's a 1650 ETH. We'll take out 20%, right? Wait, see what it does. If it consolidate, we see we have a supply zone where we could reject. So we're patient. We want to see if it ripped through. Boom, it rips through. Now we're looking at it like, damn, maybe we'll set a 30%, right? So that puts us about 21. Also clears this previous trend swing high as well too. Then we'll take out 30%, right? So that's 50% of our ETH already taken out. Let's say it runs up and we set a zone for, I don't know, 20%. We can take out 20%, leaves it with 30. Now, this is where you say, I believe in ETH or you don't believe in ETH, right? However you want to play it. If you want to swing trade it and just kind of bounce off, you can say, I'm going to leave 30% of my ETH for runners for the bull market in the future and just let it do what it do. Or you can sit back, see if this overall price action pulls back to the supply zone, right? Because remember, I talked about price action tends to come back and retest major supply zones. So we're well above it and we're off to the races. You take profits here, right? At 20, we'll call it 2,600. You've then took over, I don't know, let's do quick math or fuzzy math, took about $6,000 worth of ETH prof, and you expect it to pull back down to 18, possibly 15. That means you can take that profit and buy more ETH at a lower price. Make sense? So that's how you dollar cost average in and out of a play. And this works for any asset that has price action on a chart. Crypto, stocks, forex, it doesn't matter. Bitcoin, I can do the same thing as well too. The key thing is that you just have to identify your supply and demand zones, or you can do it off of resistance and support. And so I'll make another video about support and resistance, how to find support and resistance, and then I'll do a support and resistance dollar cost average to make it make more sense. So yeah, hopefully you guys learned something. If you like the content, like this education, please give me a like. You know, if I earned it, hit the like button. Share it with your friends who are possibly new to crypto or may not even know these techniques and just kind of winging it. I also have an ebook, How to Crypto. It's in my description. If you click the link, you'll get an 18-page ebook plus a video guide. Similar to how I just broke this down, I take each chapter and I'll break it down even more, and I'll actually take you to the websites that I'm talking about so you can kind of see firsthand basis. And it's one price. You're not paying separate for the video and the ebook. You get it for one price. It's in the description. If you know, and it's yours forever. And it's also a live ebook. What I mean is that as I will add to it, and since I have your email content address, I will send you the updated version. So it's a live running ebook. So you don't have to go out and continue to buy different ebooks from me that I produce. So yeah, How to Crypto's in the link. If you want to join my Discord, I have a link down there as well too. We talk about charting, TA, fundamentals, tokenomics, etc. all through the Discord. I will be very transparent. It is a paid Discord. I have 4 different tiers starting at $4.99 a month, ranging anywhere between $49.99 a month. I not only talk about cryptocurrency, Web3, but we also talk about stocks. We trade options in there as well. And we talk about real estate and other opportunities to make passive residual income and just overall investment. So if you want to be a part of a nice tight knit community that I call the earners, the link is in the bio as well too. That's my time, man. I appreciate y'all for rocking with me. Hopefully you learned something. Let me know in the comments below if it made sense, or if you need a part 2 where I kind of slow it down and dig a little bit deeper. Let me know. Again, I have a previous stock video as well that talks about it, because you can use it for anything. But anyways, it's your boy Wall Street, man. Y'all have a safe weekend. And yeah, let's go out here and go get these bags and run it up. And remember, this is not financial advice. Peace.